It's all about the cash money. And that's why many people vote that the statement of cash flows is their favorite financial statement. There's a lot of confusion on what exactly a statement of cash flows is and how to read one. Well, today, we're gonna solve all of that. Be sure to first go ahead and download this infographic right here, as well as this Excel file to follow along. All right, so let's start with what exactly is a statement of cash flows. The statement of cash flows is one of 3 financial statements and summarizes where your most important asset is going, your cash. As a refresher, your P&L shows the profits and losses of a business, while your balance sheet shows you a snapshot of the net worth of a business. So the P&L shows the performance of a business. The balance sheet shows the position of a business, and the statement of cash flows shows you where your cash is moving. But there are a few quirks that you need to understand about a statement of cash flows, such as the fact that a statement of cash flows can be prepared using either the direct method or the indirect method. Now, under both methods, you'll find information aggregated into these 3 sections. These 3 sections will summarize your cash movements from operating activities, your cash movements from investing activities, and then your cash movements from financing activities. So let's analyze each and every single section. Starting with your cash from operating activities. This summarizes all the cash movements related to operating your business. So that can relate to amounts that you collect from customers, or amounts that you pay vendors for inventory, or amounts that you pay employees, or amounts that you pay for rent. That's different from your cash from investing activities, which represents the amount that the business invests in the form of long-term assets. So that can be items like equipment that you purchased, or vehicles, or laptops. Now, don't confuse this with amounts invested into the business by creditors or owners of the business, because that would go into the section called cash from financing activities. So cash from financing activities, well, this can represent new debt that the business takes out or repays, or amounts put into the business by the new owners, to name a few. To summarize, cash from operating activities represents cash movements from running your company. Cash from investing activities represents cash movements from long-term assets invested into by the company. Cash from financing activities represents amounts either invested into the company or amounts paid out of the company to creditors or owners of the business. Okay, so now that we know about the 3 sections on the statement of cash flows, let's talk about 2 ways in which you could present a statement of cash flows: the direct method and the indirect method. The direct method looks like this, and it's really easy to understand. As you can see here, you can understand how much cash was paid out to suppliers, how much cash was received from customers, how much cash was paid for loans. All of it reads in pretty plain English. But the challenge is, it's really tough to prepare a statement of cash flows using the direct method. Unlike the indirect method, you need a lot more details outside of the activity you could find on your P&L and balance sheet, which is why many companies prepare a statement of cash flows under the indirect method. The indirect method is a view very similar to your balance sheet, only instead, we take the net change of each and every balance sheet account, as well as these 3 lines from your income statement. Let me explain this to you in a way in which you could understand a little bit more clearly. We remember that assets equals liabilities plus owner's equity, right? Well then, under basic algebra, the net change in assets from one period to another must equal the net change in liabilities plus owner's equity from one period to another. So if you do this for all accounts other than cash, you'll know what your plug is to get your balance sheet to tie. Now, that's a very simplified version of how the indirect method works. In reality, you'll also pull in net income, depreciation expense, and amortization expense from your profit and loss instead of your balance sheet. But that should really just represent the net change in your retained earnings, accumulated depreciation, and accumulated amortization from one period to the next. But let's think about a statement of cash flows from a logical perspective. The general idea is that if any assets in my business go up other than cash, well, that means that instead of receiving cash, I received another asset. If any liabilities or owner's equity balances go up, well, that means that I received more cash rather than paying down my liabilities or owner's equity. Let me explain. Let's say I sell my services as a fractional CFO to a company. Well, if they don't pay me right away, I'll have an increase in an account called accounts receivable. By analyzing the fact that this account went up, I know that instead of receiving cash, I received this asset right here. And vice versa is also true. When this account then goes down, I know that I received cash. My balance was converted into cash. Think of this from the perspective also of liabilities and owner's equity. For example, if my additional paid-in capital account of my owner's equity section went up, I know that the owners must have invested cash into the business. If the loan balances on my balance sheet goes down, well, that means that I have less in liabilities because I paid off amounts with cash. So the indirect method is really easy to put together because you really just need your profit and loss and balance sheet to prepare one. But you'll need to understand a bit more about how finance and accounting works to make sense of it easily. While the direct method is really easy to understand, but it takes a lot of work and extra effort to prepare. What's your favorite way to analyze a statement of cash flows? Let me know in the comments below, and don't forget to subscribe for more finance and accounting videos coming right your way.